Our next speaker is Saliya Jinadasa. I'll introduce him again. Saliya has more than 23 years of experience in reinsurance and IT. He has more than 13 years of experience in P&C reinsurance, performing data analytics, predictive modeling, capital model development, catastrophe risk modeling, reinsurance optimization, and actuarial pricing. In his previous life, Saliya worked as an IT professional for more than 10 years, designing, developing, and maintaining software applications in banking and finance, telecom, and insurance. Saliya is an associate of the Actuaries Institute. This afternoon, Saliya will be presenting on making traditional insurance products green. Ladies and gentlemen, please join me in welcoming Saliya. Over to you, Saliya.
Thank you, Andreas, for your kind introduction. Good morning, good afternoon, good evening to all of you. I guess most of you will be joining from different parts of the world. So let me share my screen first. I hope everyone can see my screen now. Can everyone see my screen? Andreas, can you confirm?
Yes, we can see your screen, Saliya.
Okay, thank you. Yes. So let me start. So sustainability, right? So this is a buzzword that we hear, not really a buzzword actually, a word that you hear quite often. And as risk professionals, right? Actually, as risk professionals, I think this is a topic that we can't ignore, simply cannot ignore. So in the previous, presentation, you hear about, why and how we actually, as an actuaries, need to address this, sustainability. So as an insurance industry, we are directly exposed to climate risk. So this is a topic we simply cannot ignore. So on that, so let me go into the content that I'm going to cover today, the importance of sustainability. I think this is, most of you are very familiar with this. And then I will go into talk about this, the two products, home and content insurance and motor insurance, how we can actually add green features into these traditional products, and some of the challenges and how we can overcome, if we want to implement these features into these products. And then at the end, I will do a recap. So the importance of sustainability. So we know that the climate change, because of the climate change increasing in the global, the temperature has a big impact on us, right, as a human beings. So if you look at this the Swiss Re report, Sigma report that they publish every year, you can see that, because of the climate change, the physical risks, because coming from climate change, you can see that there's an increase in the frequency and severity of the natural catastrophe events that occur. So if you look, this is just one example to show, from this report, what's the impact we can see, like 2021 and 2022 comparisons. So you look at like economic losses and the insured losses. And the important part is actually that if you look at the 10-year historical average versus what's happening now, like recent numbers, you can see that increasing trend basically of these economic losses and insured losses. So for example, in 2022, the insured losses were about 41 billion more than the 10-year average. And annual increase in the insured losses is about 6 to 7%. And worryingly, more than 50% of these losses come from what we call secondary perils, which are directly related to, we can associate with the climate risk, like floods, wildfires, and so on. So you can see that climate change is real, but the impact is real as well. So I came across recently on the BBC, news that it was the headline, the news on the BBC website, this global warming said to break key, 1.5 threshold by 2027. So the scientists predict that there's a probability of 66%, this can happen by 2027, not even like 2050, right? 2050 that we're looking at. So if you're looking at scenarios related to climate risk, so we are looking at basically what we call this not orderly fashion, transition. This is going to be like a disorderly transition. We are already looking at the high probability. And then if you look at the regulators and the rating agencies, there's, the onerous requirements now from the insurance companies to have the financial reports and disclosures related to how they actually address these ESG concerns and sustainability. So we have seen that insurance companies actually are taking action. So one of the things actually they stop writing underwriting risk, particularly related to the industries that actually generate, let's say, the carbon related to carbon emissions. So I have actually a personal view on that, because I think it is basically like, but not supporting these industries, we are basically kicking the can down the road for it to become someone else's problem. And then on operational wise, you see that the insurance companies, like, they're moving to greener buildings, going paperless, cutting down on their air travels to bring down their carbon footprint. And then they come up with like new insurance product as well. But is this enough? Because as insurance company, your main business is actually selling insurance product, right? Then some of these products, if you look at like motor and property, particularly in markets like Singapore and Malaysia, for example, motor is the largest class of business, and property is like the second largest class of business. Motor is directly related to carbon emissions. And on top of that, probably you have heard this news these days that like Swiss Re, Allianz, some of these biggest insurance and reinsurers are leaving this net zero insurance alliance, NZIA, because so that means there's more like it puts like more onerous on insurers to put the ESG agenda on top of the agenda, basically. So then, yeah, so if I go back to my main topic now, so how can we make these two products, let's say the home and content insurance and motor insurance, the green products, let's say, with features, different features. And then, yeah, introducing green features, if you look at it, can help in a way that for the transition part to a low carbon economy. So we talk about this transition risk, right? So how we actually can transit to a low carbon economy. So by adding these green features, we actually, what we are doing is helping our customers, policyholders, to reduce their carbon footprint. And then these policyholders, they become, more aware of, and conscious of environmental issues and, like the carbon footprint. And then they actually shift towards, green preferences. Basically, their behavioral changes can happen as well. And then, like some of the surveys done recently shows that, especially like younger generation, they're actually more concerned about, the ESG issues. And they consider, like, when they buy products, so the companies actually that produce these products, they follow ESG, what is their approach to sustainability. So that actually makes a difference as well in their buying patterns. And if you look at the liability risk again, so you can see that I talk about this NCR, some of the reinsurers and insurers are exiting this alliance because of the trade liability risk that they are exposed to because of the political stance of some of the governments. So you can see that transition and liability risk can still, in a way, can be addressed by introducing green features. So first, I'll go to the home and content insurance. So the main objective, if you look at it from an insurer's perspective and from the policyholder's perspective, so you use utility consumption like electricity bill, gas, gas consumption, electricity consumption, water consumption, to reduce the risk of incidents causing losses. For a insurance company, of course, that means you're basically improving your portfolio, home and content portfolio, because the occurrence of losses is going to be lower now. And from a policyholder's perspective, right, of course, it can have a premium savings. And then what actually, most importantly, efficient utility consumption means, they can actually reduce their carbon footprint. So those are the two main objectives. So nowadays you talk about these smart homes, right, with the IoT devices, like you can have an app on your phone that actually can control your air condition, and you can actually monitor, the utility consumption. But you don't find that in most of the households, right? Maybe like the newly built houses, you will have this kind of features. But there is one thing that every household tend to have, the utility bill, right? So we normally get a utility bill from our utility service providers. So what if we can monitor the utility consumption as an insurance company? You monitor the utility consumption and provide insights to your policyholders. For example, if there is high utility consumption, particularly during let's say a hot season, that may imply that your air conditioning is not working at its minimum optimal, settings. So that can lead to, fires and leakages. And even for the water consumption, if there is, like any unusual patterns, that may mean that your water systems are not running efficiently, and that can increase the leakages, cracks as well. And even the water quality can, suffer. So the main proposition is in this product, this feature, green features, is for insurance companies to monitor the utility consumption of policyholders and then alert them if they find any unusual patterns, and for them to actually maintain these utility systems properly. So this is just one example on a hypothetical. The ideal way is that as a policyholder, it becomes seamless. So you have a utility service provider that you actually get your utility services, and the insurance company directly connect with the utility service provider, maybe through like insurtech technologies like blockchain or some other method. So they can basically extract utilities policyholders utilities consumption data and monitor it regularly. So that's the ideal case. But in a more simplistic way, what the policyholder can do is just send their utility bill to the insurance company for them to monitor it on a regular basis. So this can actually, like if you look at this, it can actually move one step further, by creating an ecosystem. So as an insurance company, you can collaborate with, let's say the air conditioning, plumbing service providers. And then what happens is actually when you send let's say, an alert message to your policyholder, you can actually list down, the air conditioning, service providers, plumbing service providers, recommended, list of providers. So if you have a collaboration, that means you can even have like, lower rates charged by these providers. This just like for motor insurance, right? Normally insurance companies, they have a list of preferred, the workshops that you can go to, where you actually, if you actually go to these workshops, next year in the renewals, your premium can be lower, right? So the similar thing can be implemented in an ecosystem like this with these utility services. So as a policyholder, so what are the incentives that you will get out of having a low utility consumption? So as an insurance company, let's say that if you look at a benchmark utility consumption and you find that a policyholder's consumption is lower than that benchmark, perhaps you can think of incentivizing them with like a discounts with their premiums, home and content premium. So what kind of benchmark you can look at, like at a state level, maybe at district level, the neighborhood level consumption averages, and see whether your policyholders stand against them. So this can actually lead to behavioral pattern changes as well when the policyholder becomes more aware of their utility consumption. Let's say that so that actually leads to lower carbon footprint, and that actually help to raise awareness and hence reduce the carbon footprint. So this is one example. So this is a actual utility bill from a Singapore Power, Singapore Power, one of the utility service providers. So you can see electricity services, gas services, water services. You can see the bars for each month, so what's the consumption. And then you can see this there are a few lines over here. It actually shows you the national average and the neighborhood average. So that information is already there, with some of these utility service providers that I talk about, these benchmarks, right? And providing some discounts based on their utility consumption. So this is one example that I can show you that it's already available with some of the service providers, utility service providers. So what are the benefits as a policyholder or as an insurance company that you can get out of these features? So to reduce the risk of losses, of course, like by monitoring and alerting, having these mechanisms. So the policyholders tend to maintain these utility systems. That means the probability of having losses, you can actually cut them down, basically. So that's one of the things. So as an insurance company, it can improve your portfolio, right? You get lower claims now. And then it can actually improve the customer retention because you have frequent interactions with your policyholders. It's not just going to be like when you renew your policy or when you only have your claim, you interact with the insurance company as a policyholder, because there's a frequent interaction with the policyholder by like having these alerting systems. So that means you have a higher probability of retaining these policyholders with you. And then the utility service providers, they can be a distribution channel. So when someone, go to a utility service provider to get the services, they can actually, promote these home and content services from the insurance company for them to actually buy. And then it can be an additional source of income for the utility service providers, through the commissions. And then there are cross-selling opportunities as well. So as a utility company, right, let's say that if there is any retrenchment of the policyholder, they may not be able to pay their utility bills. So the insurance company can have, the product to cover that. So one example is that, there's a Ethica Singapore and Singtel collaboration. So like in the mobile bills, right, if the mobile phone, the owner, if they get retrenched, this insurance product actually pay their, bills for a couple of months. So we can actually implement similar kind of products with the utility service provider. And then importantly, raising awareness. So about the carbon footprint the policyholders have and then the environmental impact that can actually lead to, more sustainable lifestyles. So but I talk about this transition, right? So this is where, you can see the transition coming in. And then of course, the policyholders, we can adjust them to the increasing threat of climate risk as well when they become more aware of what's happening. And the next one, so I will cover this motor insurance product. So how we can make them in, add green features into motor insurance. So most of the time, like motor insurance, motor vehicles, they tend to be these internal combustion engines, right? What we call ICE, and these are they directly contribute to carbon emissions, right? So if you look at these like emerging markets, like not so developed markets, most of them, will have this traditional motor vehicles, right? So I'm mainly talking about this, like I would say that emerging and developing markets. So if you even like take, for example, Singapore, Malaysia, as I mentioned earlier, motor is the largest class of business. So as insurers, of course, you are supporting these products. That means you have a direct contribution to the carbon emissions in that sense. So what kind of initiatives that you can take as an insurer to actually counter this, the carbon emissions, to make it carbon neutral? So one example is this, the Lemonade Insurance Company in US. So it's actually an InsurTech-based insurance company. So what they do is for their motor products, right? So actually they have this tree planting program. So based on the carbon emissions from their policyholders who have a motor, let's say motor policy, they plant trees to counter that carbon emissions. So that's one of the things they are doing, some of the insurers are doing, so quite interesting. But if you look at markets like Singapore, of course, you can't do that because we have limited space here, right? Maybe Malaysia, the insurers can do that, consider that kind of, campaigns. So we can look at other ways how we can actually make them green, these motor products. So I'm sure that you have heard about telematics, right? So it's a well-known and prevalent technology, used by insurers mainly in, I would say, like mature markets. So the telematics is basically a method of monitoring cars, trucks, other equipment. So with the equipment, we have these onboard sensors to gather information. Like for example, if you have a motor insurance product, right, it gather information on the driving patterns, mileage, and etc., etc. So we can actually use this telematics to help reduce the carbon emissions from vehicles. So let's see how we can do it. So the main objective, again, from an insurance policyholder's perspective and an insurer's perspective, to reduce carbon emissions from vehicles for the policyholders, and then reduce the incidence of accidents, leading to losses. Basically, let's see how we can do it. So the first thing, you can promote efficient driving. So the telematics, right, because you can actually monitor the driving behaviors. So like we know that, speeding, harsh accelerations, sudden braking consume more fuel. So what we do is with telematics is we can actually alert customers, on their driving behaviors and basically monitor and alert them, so what kind of risky activities they are involved with when they drive. So the drivers become more aware of their, aggressive driving behaviors and can take remedial action. So that can help to lower the fuel consumptions. And the next one is about recommending optimized route. If you nowadays, if you look at Google Map, it actually shows you what is the optimal, the route that you can take, like in the shortest possible time. So the similar way, right, with the telematics, you can actually recommend optimal routes to drivers, so they can actually reduce, unnecessary miles that they take, and avoid congested roads as well. So this is particularly important for commercial fleets to optimize their resources. and then reduce unnecessary idling. So we know that, like idling means, that's one of the main contributors, carbon emissions, idling of vehicles. So for example, this Canadian government has done a study, and they have found that if every Canadian were to, reduce daily idling by 3 minutes, they can cut down the carbon emissions by 1.4 million tons, which is equivalent to about 320,000 vehicles being taken off the road. So you can see what kind of impact it can have. So by optimizing routes, that means you basically avoid these congested roads, and it can help to cut down the carbon emissions. And then regular vehicle maintenance, right? If you look at, if you don't maintain your vehicles, motor vehicles regularly, that can again have an impact on your carbon footprint. So like if you do, like brakes, if they don't work properly, right, when you accelerate, that means you consume more fuel. And one of these studies by the US Department of Energy, it says that if you don't maintain your tire pressure properly, it can actually, reduce the mileage, that fuel mileages as well. So that means you are consuming more fuel. So by using telematics, you can see that, and then monitoring and alerting your policy holders, so they can basically, change their driving behaviors that can actually help to cut down the fuel consumption. At the same time, can help to, cut down the incidence of losses as well. So in terms of incentivizing the policyholders, again, you can look at, like, of course, I'm not talking about this pay as you drive kind of, the policies. So if you look at a traditional policy, so normally we don't take, these mileage into consideration. Of course, it can be risk factor, but what you can do is, if you have a lower mileage, again, you can have like a benchmark. You look at a national average. So your policyholders, what's the mileage? And if it is lower than, let's say, your benchmark, you can actually consider incentivizing the policyholders with discounts, similar to what we actually talk about in the home and content insurance. So I just given a hypothetical example just to show, a message, that you can receive from, let's say, insurance company. So you can say that your mileage is, below a certain average. That actually contributes, to lowering the carbon emissions by equating it to a number of trees that you are saving. So it actually has a sort of like a better impact, I would say, because you actually see that your behaviors basically have an impact and impact on the environment now. So then you can, of course, incentivize with, additional discounts. So they can actually, continue with this kind of, become more aware of their, the driving patterns, and then, try to cut down the carbon footprint. So again, this is our example from the Lemonade. So what they do is actually they have this alert system to show them, their motor policy holders, how many trees the company is planting in exchange of the carbon emissions from their drivings. So again, you can see that, of course, it's not in a downside is actually if you drive more, that means, the insurance company has to, plant more trees. But at least you can see that someone is doing something, because of the, we are causing, contributing to the carbon emission, but someone is taking action to, counter that. Again, if you go back, the benefits, the insurance companies and the policyholders can get, reduce the risk of losses because, with the monitoring system and alerting mechanisms, you can change your driving behaviors and improve, and as an insurance company, it can actually improve your motor performance with a less number of incidents. And then again, improve the customer retention because you have more interaction now with your policyholder compared to, policy renewal time or when you make a claim. And the savings on the fuel consumption, again, you optimize your routes. If you regularly maintain your cars, vehicles, it actually, help to lower the fuel consumption. That actually leads to cost savings. And importantly, again, raise the awareness, right? So about your carbon footprint, what's the impact it can have. So the policyholders, can lead a, more sustainable lifestyle. And again, adjust them to, increasing threat of climate risk. Yes, so we talk about all this, like the features and, yep, that sounds, good. But the thing is, what are the challenges if you want to really implement them and how to overcome them? So let me cover some of these challenges. Yeah, for the telematics, the main concern is the privacy concerns, right? Some of the studies done in US, UK says that 50% of the policyholders they don't want to have telematics because of the privacy concerns. And they think that, if the insurance company can monitor your driving patterns, behavior, they can get penalized on their premiums next time when they go for renewals. So you have to be very clear in that sense, so that's one of the major concerns that, the privacy concerns can be one of the major issues with this kind of, features. Similarly for the utility consumption. And the next one is the interpretation of the data. Like telematics, right? Service providers, they are very good at gathering telematics data. Of course, you have a lot of information, but how do you make sense out of those, So you need, expertise to do that actually. Lack of, knowledge, specific knowledge to interpret the data is another issue. And then the cost concerns, all this will involve costs, right? As an insurance company. I remember that I presented this to one of the insurance companies in Singapore. So the first thing they said is actually, compared to the premium size, for the home and content insurance, they don't find this is beneficial because of the cost that can involve by in implementing this kind of features. So it's a cost concern is one of the issues as well, challenges. So how do we overcome this? Like for the privacy concerns, right? So as an insurance company, you have to be transparent with the policyholder about how you're going to use this data and for what you are going to use this data for. So then actually you can have a compelling position, right, for a customer to join such a program, green program, if you are very clear about you are only using this data for, let's say, to monitor your driving behaviors and to alert you, not to penalize you, and to help you cut down your the carbon footprint. And for the interpretation of the data, right, again, you can collaborate with the experts to address this issue. To address the cost concerns, right? So for telematics, you can actually look at some of the cost-efficient, applications. So normally, like for the telematics, you have to have special devices installed in the vehicles, right? So instead of doing that, you can use smart application, smartphone applications nowadays. So there are third parties providing that kind of application. For example, in Singapore, there's an app called Parrot app. So they had a collaboration with Ergo Insurance Company. So basically, they monitor, your driving behaviors, your mileage, and even your carbon footprint as well with this kind of app. So there are third parties providing that kind of applications, I think more cost-efficient applications, more pragmatic as well. And then again, so as an insurance company, you need to actually carry out a proper cost-benefit analysis, right, at the end. So to see whether it's really viable to do this. So as a first step, the insurance companies can consider several, several items over here that I listed down. First thing is actually to look at the markets that have implemented this kind of products. Maybe it's a local market or overseas market, and see whether they have been successful. Like I talk about this Lemonade, right? Insurance company doing this similar kind of things in their market. And then you can actually do what we call a proof of concept, right? POC. Select a small group of policyholders and implement this kind of product and see what is the outcomes. So whether it's going to be successful or not. And then you can actually get the feedback from the customers, whether they want to, their willingness to participate in this kind of thing. And then you can talk to intermediaries, like I talk about this app, the smartphone app providers, so third parties who can actually provide the technology to, implement this kind of features, and then see, like address the other challenges that they can arise. And then you can look at, the data on the campaigns you launched in the past as an insurance company, maybe not the green, green campaigns, maybe something similar, and see what are the driving factors for their success, and see whether you can actually use those to implement with this kind of product. Yeah, so that's the end. Just a recap. So we know the climate changes are real. Yeah. So sustainability, has become a major concern for insurance companies. Yeah, that's why we are here. Talk about this sustainability as a one of the major concerns. And then I looked at motor and property, which are two largest classes of business normally in an insurance company's portfolio. And we looked at how to add green features into these two classes to reduce the carbon footprint, and the rest awareness among policyholders about ESG issues and environmental issues. So as I shown, right, both insurers and policyholders can benefit by having this kind of features. This is not just like a one-way street. Both parties will have benefits. Of course, there will be challenges, as an insurance company to overcome. And there are I looked at some of the things you can actually do to overcome these challenges as well. So that will be the end of my presentation. Yeah, thank you very much for listening in.
Thank you very much, Saliya. Thank you for your fascinating insights. It's interesting to see how a decade ago, the health insurers started requesting data from the health trackers that we used to wear, that some of us wear around their wrist, and leverage on that. And it's fascinating to see the possibilities that general insurers have if they get access to certain data. But let me clarify something with you, Saliya.
Yeah, sure.
The example of the utility bill, that was someone with way below average usage. Was that a broker who travels all the time?
Actually, it's my bill, so what happened was, so I have a relatively young kids, 3 kids. So what happened was we normally stay in our place in the weekends. The weekdays, actually, we go to our in-laws place. So because of that, the consumption is so low,
We all thought it must be a broker.
I see. Yes. Good observation, Andreas.
So there's one question raised by Raid Mussolin. You'll be on a panel with him later.
Yep.
So sure. Let me read Raid Mussolin's question. Using used or recycled parts instead of original ones in vehicle repair by a green activity. By doing that, would that generate lower emissions? Then he's also asking, should insurers incentivize this? How about other ways to reduce emissions in repairs?
Okay, so I'm not really like a mechanical person, but I would imagine that, right? If you use if you don't use a brand new, let's say, spare parts, second-hand ones, probably I don't think it will have a like optimal effect that you can get with a the brand new spare part. So that could lead to, like, for brakes, let's say, if you want to replace your brakes, right? So if it's a brand new, let's say, the spare part, then of course I think it will have a better impact, like you have a smoother braking compared to if you're using a second hand, the brake pads. So that's one example I can give, probably. So I would say, like, the cost savings you will have, let's say having let's say using a second hand may not have that I don't think it will have the same kind of how should I put it, sort of defeat the purpose, I would say, of doing what I'm talking about, like having this, having a proper maintenance of vehicles. And the next one, sorry, so let me see the second question. So in terms of the incentivize, right, incentivizing the policy holders, right, with the premium, let's say, discounts, right, that I talked about. That's what I think he wants to address. So I thought about this, but imagine that, when you, let's say, alert your policy holders about driving behaviors that can basically lead to having safer driving behaviors, right? That again lead to less accidents. So as a policyholder, right, that means you probably even like get a lower premium, when you go to the next renewal. So it's already there, on top. If you don't have explicit, discounts on this green features, I guess, without that, even, we will probably get a discount, because of your good driving behaviors. So I'm saying that, by having this additional discount, you are encouraging people to, maybe, like, if you're using a car, let's say, to go to work, maybe you'll think twice, why maybe take public transport next time, to cut down your mileages and cut down your carbon footprint. So these are the things I felt that, incentivizing policyholders can encourage them to change their behaviors that can lead to, lower carbon footprint.
Yeah, you can even reduce emissions as a driver by driving more calmly instead of accelerating fast and then jam braking.
That's right, yes.
in front of the red light.
Yes.
Even with a calmer driving style, you can reduce the emissions. And even that could, in theory, even that driving behavior could be monitored by the insurers if they have access to the GPS data.
Yes.
Sometimes when I ride a bus in Singapore, I'm appalled by how the bus would speed towards the red light and then make a hard stop.
Right? Yeah,
and then make a hard stop in front of the red light. I always wonder in my head how much diesel, how much petrol could be saved if they drove more calmly.
Yes, smoothly. Yes, that's right.
I always ask myself this question when I ride a bus in Singapore.